Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast. Good morning. It's Monday, the 24th of November. I'm Caroline Hepker in London. Coming up today, we have the latest on America's Ukraine peace plan and the secret Russia talks that blindsided Europe. Top bosses tell Bloomberg they will slash investment in the UK if this week's budget increases their costs. And the diamond effect, how JP Morgan's office mandate has helped to put the sparkle back into Canary Wharf. Let's start with a roundup of our top stories. US Secretary of State Marco Rubio has suggested that President Trump's Thursday deadline to secure Ukraine's support for a US-backed peace plan isn't set in stone. Talks in Geneva between America and Ukraine are understood to have made progress towards a deal, but the two sides drafted an updated and refined peace framework. Here is what Marco Rubio told reporters after the talks.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now point by point, and I think we've made good progress.
Marco Rubio was speaking after Bloomberg learned that the controversial 28-point peace plan presented by the Trump administration to Ukraine as a take-it-or-leave-it proposal was largely the result of several weeks of behind-the-scenes negotiations between US Special Envoy Steve Witkoff and Russia's Kirill Dmitriev. Those talks reportedly excluded not only Ukraine and its allies, but also some key US officials. One source telling us that Washington later asked Kyiv to confirm that it had provided input into the proposals after it became clear Moscow had played a significant role in shaping the plan. Now, here in the UK, CEOs are warning that they will cut investment into Britain if Chancellor Rachel Reeves hits them in her annual budget this Wednesday. Bloomberg heard a range of worries from the bosses it interviewed about the budget. Gatwick Airport CEO Stuart Wingate told us that tax rises could put the government's growth project at risk. Bloomberg's James Wilcock has more.
Concern, cost and lack of clarity. Those are words from the bosses of Gatwick Airport, Phoenix and Butlins. The leaders of three very different businesses are among the many who spoke to Bloomberg about their fears around the upcoming budget and unhappiness with the uncertainty it has caused. The government is hoping to win companies back round by announcing a pledge to cut manufacturer energy bills at the CBI's annual conference today. But given at the same event last year, Chancellor Rachel Reeves promised corporate Britain she wouldn't increase their taxes again, the reception may be a bit more muted this time around. In London, James Wilcock, Bloomberg Radio.
In deals news, BHP has ended its attempt to acquire fellow mining company Anglo American for a second time. In a regulatory statement today, the company confirmed that it had concluded preliminary discussions and is no longer considering a merger of the two companies. Our mining and metals reporter Paul Allen Hunt says the deal would have been complicated.
Well, this is it. It was never going to be easy. It certainly wasn't going to be easy last year, and it wasn't going to be easy this time. We don't have a lot of detail, I will say that at this point, but we do know that it was scrip or shares and cash. The premium that BHP would have had to have offered to get a real serious recognition from Anglo and have a proper discussion would have been significantly higher.
Bloomberg reporter Paul Allen Hunt speaking there. Bloomberg understands that Anglo American rejected BHP's latest approach after deciding that it was not superior to its planned tie-up with smaller Canadian firm Teck Resources. Teck and Anglo shareholders are set to vote on their merger in early December, and the deal still needs regulatory approval. The UK government is putting £50 million towards making critical minerals in a bid to loosen its reliance on China. Britain plans to fund business to produce almost a third of Britain's needs from domestic mining and recycling by 2035. China has become the world's dominant supplier of rare metals, which are crucial resources for advanced technology. Earlier this year, the country has started to restrict its exports as political leverage. In President Donald Trump's second term, crypto assets have transformed his family wealth. However, they are now getting a crash course in the wild volatility associated with digital currencies. Bloomberg's Tiwa Adebayo has more.
Shares of the president's Bitcoin hoarding social media company are near an all-time low, and the value of a Trump-branded meme coin has fallen by about a quarter since August. According to the Bloomberg Billionaires Index, the recent losses are all part of a broader crypto crash that's wiped nearly $1 billion from the first family's fortune since early September. The Trumps own a growing portfolio of crypto ventures, including intricate deals that go beyond straight bets on the value of digital currencies. But it's retail investors who back Trump-linked projects that stand to lose the most from the drawdown. For example, any speculator who bought Trump's meme coin at its peak on inauguration weekend would have lost almost the entire value of their investment by this month. Despite the challenges, Eric Trump, the president's second-born son, has repeatedly urged investors to double down. In London, Tiwa Adebayo, Bloomberg Radio.
And those are our top stories for you this morning. Well, looking at the markets, Bitcoin has seen some very harsh twists, as we were thinking about there in Tiwa's discussion around President Trump. So Bitcoin currently trading at just above $87,000 is down 1% this morning. That's still better than Friday's lows, which hit about $80,500. So we recovered a bit over the weekend, but still a very tough few weeks for Bitcoin, seeing a significant slump. European stock futures, though, more broadly, they are higher, 0.8%. S&P 500 E-mini futures also up by 0.5%. So again, after a difficult week for US and European equities last week, perhaps pointing to something more positive this morning. We did see some gains in Asia. Japan may be shut for a holiday, but the MSCI Asia Pacific Index up 0.7%, and traders are increasing bets on a Fed interest rate cut for December. The Bloomberg Dollar Spot Index currently is flat, and oil prices this morning beginning to gain 0.3% higher for Brent crude futures. So those are the markets. Now, in a moment, we are going to give you more details on the latest when it comes to the evolving Ukraine peace plan. Plus, after some lean years, Canary Wharf is making a comeback here in London. But there's always another story that gets my attention in the mornings. Are you breathing deeply and well? Bloomberg's Tiffany App has been writing about how breath work has become the new meditation. The idea of doing a class on something that we do subconsciously may be a bit absurd, but with her description of all the various techniques of controlling breathing to calm your nervous system, perhaps it sounds a bit more appealing. She has tried, I tell you, so many different techniques, including alternate nostril breathing, ujjayi breathing, which sort of mimics the sound of ocean waves, and even hyperventilation, which is called holotropic breathing, which you said wasn't very pleasant. But it's all part of the wellness industry that is booming. I mean, the figures are staggering. Apparently, it's going to be worth nearly $9 trillion by 2028. The beauty of breath work, she says, is that within a few breaths, you can alter your physiological state. So perhaps this is the moment to take some deep breaths now. And as Tiffany says, you're not just thinking about relaxation, you are commanding your body to shift into it. Maybe we all need a bit of that. I'm going to put a link to the story about breath work and how important that is in our show notes for you. Now, to the negotiations over Ukraine, which continued on Sunday in Geneva. The deadline for a deal seems more fluid after comments from the US Secretary of State Marco Rubio. But the basis for talks was a controversial 28-point proposal that was agreed by the US and Russia in secret talks. Joining us now is Bloomberg's Russia economy and government editor, Greg Sullivan. Greg, good morning. What is exactly in this deal, and who is at the negotiating table after the latest round of talks in Switzerland?
Well, as you said, a lot of this is fluid. In Geneva, for instance, we had Ukraine, which was represented by Andrei Yermak. He's President Volodymyr Zelensky's powerful chief of staff. And the U.S. was also there, represented by Secretary of State Marco Rubio, along with Army Secretary Dan Driscoll and Special Envoy Steve Witkoff. Now, apparently out of this Geneva talks came an updated and refined framework document that supposedly reconciles positions in that original 28 28-point proposal that you mentioned. Now, that proposal to end the war came up by Trump, and he has since been pressuring Ukraine to accept it. What we know is that Russia contributed heavily to that plan, and under it, Ukraine would have to withdraw troops from the eastern parts of the Donbass that it currently controls and that Russia has failed to occupy. We know that that area would ostensibly become a neutral, demilitarized buffer zone recognized as Russian. But there's other things, too, in that proposal, such as there would be curbs on the size of Ukraine's military and a prohibition of Ukraine ever joining NATO. The remainder of the front line would be effectively frozen under that proposal, and parts that Moscow does control would effectively get recognition. For instance, they earlier illegally annexed Crimea and Luhansk. Those would get recognition. So these are very favorable terms to Russia. So Ukraine has been pushing to get this Geneva talks to get their own points in front of the White House. And Rubio, again, coming out of Geneva, described it as very productive. And it does appear that there is some loosening of that deadline, which buys Ukraine a little bit of time.
Okay, so a little bit more time maybe for further talks, as you say. I mean, European allies have been pushing back and did seem to be taken by surprise by the blueprint that emerged. What is Europe doing then to try to support Ukraine? I mean, the war has been going on a long time, and they did seem to be blindsided by this peace proposal.
Well, funny enough, it wasn't just Europe that was blindsided. We know that Witkoff actually negotiated this plan with Kirill Dmitriev, an envoy for President Putin, and actually Rubio wasn't even fully looped in until late. And Trump found about it later, though he blessed it once he was briefed. Now, as for Europe, throughout the entire Trump term, they've been trying to get a seat at the table. They back Ukraine. They see Ukraine's security is tied up with their own, and they've been trying to get a seat at the table. Now, they obviously were not involved in this 28-point plan. It's actually unclear if the Americans even want to see Europeans together with the Ukrainians, but they've been trying to work with Ukraine to draft a counterproposal to push back on some of the terms that are less favorable to Ukraine. They've been trying to buy Ukraine more time, and they've also been bringing up the idea of a security agreement for Ukraine. That's something that is very vague in the original 28-point proposal, and something that Ukraine is hammered on. They need a security guarantee to make sure that Russia just doesn't reignite conflict later on down the road. So that's a bit of what Europe has been trying to do.
So then also, what does it mean for Russia? Is this in some way US appeasement of Putin?
Well, the 28-point proposal certainly does deliver much of what Russia wants, and actually largely what it hasn't been able to get through force. That makes the Geneva meeting very important for Ukraine, because they see this document that Russia had a lot of input into, that does deliver a lot of what Russia wants, and they have to push back on this and get their own points in consideration for the White House. So it does look like that Geneva meeting was somewhat successful for Ukraine, potentially loosening that deadline. Ukraine has been pretty consistent that it won't sacrifice its own sovereignty, but nonetheless, ceding territory that it still controls and provisions like the reduction on the size of its military, that doesn't bode well for Ukraine's future security.
Okay, Greg, thank you so much for being with me this morning. That is Bloomberg's Russia economy and government editor, Greg Sullivan. Thank you. Stay with us. More from Bloomberg Daybreak Europe coming up after this. Now, I want to turn to something here in the UK. Canary Wharf seems to be making a comeback 5 years after being battered by COVID-19 and the rise of home working. The East London financial hub is seeing more bankers trek to the office and even weekend visitors. Joining us now is Bloomberg's EMEA equities reporter Isabella Ward. Good morning. Canary Wharf looked in real danger, didn't it? Why are things brighter now?
Yes, good morning. So I've been looking at Transport for London data on the number of commuters by rail and by tube. And it turns out that in Canary Wharf, the number of visitors has finally exceeded pre-pandemic levels. Of course, not just in Canary Wharf, across all of London, they fell off completely during lockdown, and then they never really recovered as this new era of working from home was ushered in. And in fact, in the city, in the West End, they certainly haven't recovered yet. So Canary Wharf is certainly a bright spot. We think a big reason for that is because it's London's financial district, and really it's the banks that have been leading the return to office movement. Notably JP Morgan mandated earlier this year that its staff have to be back in 5 days a week. They've got a massive footprint on that estate, and so that's certainly been part of the boost we've seen.
The surprise is also that, as you say, Canary Wharf, it's all the tall gleaming towers, it's the financial district, but they are getting a slice of the leisure tourist and the leisure visitor.
Yeah, I mean, this was part of the estate's strategy to bring back visitors, to bring people who, not just bankers, to make it more attractive for all types of person. So as well as, a large roster of bars and cafes, they've also been focusing on other leisure activities. So I went down and people were pointing me to the Hunger Games on stage has just opened, and there's go-karting and kids play areas, and there was the open water swimming in the summer. And actually the number of weekend visitors is 50% higher than it was pre-pandemic. So it certainly seems to be working.
Yeah, well, you can get there more quickly because of the Elizabeth line now, can't you? Just lastly and briefly on the financials for the Canary Wharf Group, which is the landlord that's mostly in charge of the estate they're owned by Brookfield and Qatar.
So this will be quite a relief for them. They've been hit by low demand, higher borrowing costs. They're losing some of their largest tenants like HSBC. They did get fresh equity from Brookfield and Qatar to fund this turnaround. So the signs that it's working will certainly be a relief.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.